Hello and welcome to this week's episode for SPY Trader Now. Today is June 17th, 2023. Our model portfolio is up 6.56%. I am your host. My name is Ken, and let's get right into this video right now. Our goal here at SPY Trader Now is to beat the returns of the S&P 500 buy and hold investor. The buy and hold investors is currently up 14.77% year to date. They've just been on a complete tear recently, and I'll show you that in the charts as we go through the presentation. And here we just use a simple 3-position portfolio in an effort to try to beat the buy and hold investor. Currently we are not doing that, as we are up only 6.56% compared to the buy and hold investor, which is at now 14.77%. But before the end of this year, our goal is to beat that return. So that is what our intention is. Here are some past results for SPY Trader Now. In 2022, we had fantastic returns of 21% compared to the negative 19% that the buy and hold investor returned. And in 2021, 78%. 2020, we doubled the portfolio at 100%. If you want to see how I do this, go ahead and hit that subscribe button, ring that bell, and smash that like button down. Last week, the S&P 500 had an amazing week, up 2.6% for the week. Here are the trades that I made last week. So on Friday, June 16th, what I did was I said cancel the good till cancel trade, because we had a trade that was in there, an order that was a good till cancel that never got executed. So I said cancel that trade, and then we're going to roll out our current option by closing the 616 call with the 417 strike for about $24, and then we're going to sell to open 2 contracts with a 630 expiration, same strike, 417, and we got paid $25.68 for that. So basically we rolled out our call options by 2 weeks, looking for that pullback, so that way we can take that $25.68, and if the market does correct, and when it does correct, we will be able to buy to close this transaction at a much lower price than $25, pocketing that difference. Here are some trades that I've made in calendar year 2023. If you want to see all my trades going back for the last 3 years, you can do so at spytradernow.com. There'll be a link down below. Also, if you want to sign up for my real-time trade alerts so that you can receive these, you can sign up at spytradernow.com as well. Here is our equity curve for the model portfolio year to date for 2023. Here is the equity curve for the S&P 500 buy and hold investor for 2023. And here is the 2 equity curves combined on the same chart with a percentage basis, so you can see how well our portfolio is doing against the buy and hold investor. Currently, the buy and hold investor is absolutely smoking us, so we have our work cut out for us. Okay, so on last week's meeting, which had the announcement on June 14th, the Fed Chair Jerome Powell hit the skip rate hike. So he said we're going to skip June, and we're going to give 1 or 2 more rate hikes depending upon the data for the remainder of the year. So at first, the market didn't know how to take that type of information, but as you can see from Friday's trading action, it likes what it heard, and as we had an extremely powerful day on Friday, I'll show you that in the charts. Now we're looking at things from the presidential election cycle theory, which states depending upon the year of the presidential term will determine what the average return is for the S&P 500 that year. Currently, President Biden is in the 3rd year of his term, and there's a historical average of 16% gains in the 3rd year of the presidential election cycle. Right now, the market is up 14.77%, so there's actually 2% more to still be within historical norms that we could still gain in this market in this calendar year. Now we're looking at things from the bond market, and we want to pay attention to the bond market because it's 4 times the size of the stock market. And the bond market says to get out of the stock market because we have an inverted yield curve, meaning that the short-term 91-day and 2-year yields are at a higher interest rate than the longer-term 10-year yields. This is an inverted yield curve. It's not normal, and things are going to be pretty tense until this corrects back to normal, meaning that the longer-term yields are at a higher interest rate than the shorter-term yields. Also, we have rising interest rates. 1 year ago, the 10-year was at 3.49. Now we're at 3.84. It's a rising interest rate environment. You can get this information from bankrate.com. There'll be a link down below for you to research this on your own. Now we're looking at things from a valuation according to current market valuation. Link is here and it will be down in the description. Currently, we're overvalued by 47%. The PE ratio is at 29.8 compared to the historical average of 20.2 on a chart that puts us at 1.2 standard deviations. 65 to 67% of all trading takes place between the +1 and -1 standard deviation. And we are just above the +1 now at 1.2 standard deviations. And now we're looking at things on the CNN Business Fear and Greed Index. Link is here and it'll be down below. Here's our friend Warren Buffett. And currently we are at extreme greed. Last week we were at 77. Today we are at 82. So extreme greed is increasing. And be fearful when others are greedy, and be greedy when others are fearful. Now we are looking at things on a seasonality basis. This here is going back 20 years for the S&P 500, and currently we are in the month of June. It is the second worst month of the entire year for stock market investing. This month, there's a 60% probability that we're going to close higher than when we opened the month. We've clearly accomplished that goal. The month is up now 5.56%. We are screaming high in the month of June, the second worst, normally seasonality, worst month of the year, the second worst month of the year. And we are up a tremendous amount. Now we're looking at things from a long-term 20-year chart, monthly, S&P 500, bull run 2009, all the way over here to 2022. Then we came down in this correction, broke out above it, and we haven't looked back since. We are going straight up. Things like this are unsustainable. From the MACD's perspective, we're just about positive on the MACD. It's just getting ready to cross. Slow stochastics heading north, all bullish signs, but we can't go straight up. It's unsustainable. We have to have some type of a flattening or pullback. Now we're looking at things from an intermediate standpoint. It's a weekly chart of the S&P 500. We're going back 5 years, and here you can see our trading ranges, and according to these past resistance lines, we just broke this one right here, and now we are coming up to this next resistance line at about 450. MACD is positive, slow stochastics is way high and flattening out. Now we're looking at the same chart, but instead of going back 5 years, we're only going back 1 year, and you can see how we just came up. Now what I'm looking for is I'm looking for a pullback into this trading range right here, which is 4.2%. So at about 425, when the market comes down to 425 or thereabouts, this is where I want to close, buy to close that option trade, pocketing a good chunk of that $25. That's my goal, and I need to see if the market will cooperate in doing so. Now we are looking at the same chart, which are daily bars, except going back 1 year, we're only going back 6 months. So you can see these candlesticks a lot better with more detail. Here I've put in a Fibonacci extension from the bottom of this support line over here, grabbing it to the top of Friday's action. The 50% retracement is at 422.86. Normally you pull back in bull markets to the 38 or to the 61.8, this window here, anywhere in this window between here and here, is a great time to buy the buy to close our option, and because statistically in a bull market, this is where the market should reach support levels and then come up. I'm right around the 50% mark, which is at 422, and then I raised it just slightly because I see a bunch of support at these candlesticks right there at the 425. So that's where I came up with the 425 level to buy to close my option so I can go more long in this market. Now we're looking at a ratio chart, which is the RSP S&P 500 equal weighted ETF compared to the SPY, which is the S&P 500 normally weighted. So the black and red line is the ratio chart. The green line is RSP and the blue line is SPY. We want to focus on the black and red line, and you'll see how we've fallen off of a cliff most recently. And we've done that 2 other times in the past. And both times that we've fallen off a cliff in the past, the S&P 500, the blue line, has also followed suit here and here, all the way down to here. We have not fallen off a cliff here, which is extremely remarkable considering that in the last 20 years, this action has only happened a couple of times, and the S&P 500 has really followed suit, dropping as well. Here we haven't dropped at all. We're going north on the S&P 500, which is just incredible. But when the MACD on the ratio chart crosses above its signal line, after it has dropped to these low levels in the last 20 years, that is really the end of any downside movement, and we are looking at clear skies ahead here, and the same thing right here. So you can see after the dotted line, there still was a correction, a little bit of a correction in the S&P 500 here, but it didn't last long. Then it went north, and here it just continued to go north after reaching a bottom over here. So right now our MACD has bottomed, but it has not crossed above its signal line, which will confirm that we are totally towards the end of this, any type of corrective action, and we should be looking at bull market ahead so we can put more leverage into our investing, which will easily beat the returns of the S&P 500. But we're waiting for that confirmation before we take on a lot more leverage in this market. Now we're looking at the VIX volatility index, or the fear index. We were in this trading range for the VIX, and then we've dropped below it, and now we're still below it, which means that fear is really coming out of this market. We are currently, as of Friday's action, really at the lowest level we've seen in the last year. So we're at rock bottom levels, and when you're so low, the only generally speaking, the place you're going to go is up. Well, when the VIX goes up, the S&P 500, which is this black line, comes down. You can see that here. When the VIX was traveling north, the black line, the S&P 500 during that time, was traveling south. So these work inversely, and vice versa. When the VIX is at a high level and coming down, then the S&P 500 travels north. But right now, the S&P 500 is here, the VIX is here. The S&P 500 has a higher probability of dropping, and the VIX has a higher probability of rising. But other things that we want to keep an eye on, the MACD was starting to travel towards its signal line, has since flattened out, is now coming away from its signal line. That's actually an indication that this market is going to remain in this area for some time. And the slow stochastics is curled over and rolled below its signal line on the VIX chart. All these things don't indicate that the VIX is going to immediately jump up. It just gives you probability of more staying in this low range. We don't see the conviction that we're going to jump out yet. Now we're looking at a 1-year chart, S&P 500 on TD Ameritrade's Think or Swim platform. Here you've got standard deviations of +2, -2, +1, -1. Currently, we are very close to the +2 standard deviation. 95% of all trading takes place between the +2 and -2. So there's only so from a probabilities perspective, there's only so much more room this market can go before it either has to move sideways or more likely travel south. Now we're looking at the same chart, but instead of 1 year, we're only going back 3 months. This chart is showing us that we are in buy the dip mode. We're looking for that dip and we want to buy the dip. We already have 200 shares of the S&P 500, but because of our call option, we're capping our profit potential until we can close that covered call trade, which we're wanting to do when we come down closer to this regression line or something like that. We're trying to get into the 425 level, which is so I've got an alert to be sent out. When the market reaches 426, I'm going to get an alert on my cell phone, and at that point in time, I can check the price of that option to see where it's at. This is right around here is where I want to buy to close that option trade, because I think we're going to reach a sticking point here. That'll be below the 50% regression line, but still above the +1 standard deviation. The -1 standard deviation. So I just gave you a ton of information. Now comes the critical thinking. What are we going to do with that information? Well, as of June 17th, 2023, market summation according to SPY Trader Now. I am your host. My name is Ken, and here is my market summation. The Fed hit the pause button. Well, they really hit the skip button, but we'll call it skip or pause or whatever. They didn't raise rates on the last week's meeting, and they may raise rates 2 more times this year. We are in a buy the dip mode, and at the +2 standard deviations, we're expecting a 3 to 5% pullback. And we will buy to close our call options. That should be S because we have 2 options. We may buy some long calls this year, but I will hold for now till I see a better entry point. So I do want to take on more leverage, but I don't want to do it at high risk levels. And that's the whole thing here. It's risk management. And that's why my returns are not equating to the returns of the buy and hold investor, because the buy and hold investor is making this money and making good profit, but at a higher risk. And that is why I've been a little bit timid on leverage. And my returns are showing that. So I'm just waiting for better entry points. So Monday is going to be a holiday. Juneteenth is going to be observed by the New York Stock Exchange. So the markets will be closed for Monday, June 19th. Tuesday will be the first trading day of next week. And that's it. I hope you have gotten some valuable information out of this video. If you have not done so already, hit that subscribe button, ring that bell, smash that like button down, and I wish you good trading.